This is Made for More Living with Johnny Jennings. Online at madeformorerealty.com.
So as of this recording, mortgage rates, interest rates are at their lowest point since October of 2024. So not quite a year, but a long time. And what's interesting is this comes, right after the Fed said they were not going to reduce the federal fund rate. Yet, right?
They'll do it in September. They have every indication. I think the chances of them doing that went up to like 80% when the job numbers came out. And the job numbers weren't as great as President Trump was hoping. So he fired that person. And so the Fed obviously sees every indication that they will need to cut rates September and then possibly even again later this year.
So we'll see.
Twice.
So I don't necessarily care about what the Fed says. Like they said they were.
Because you don't see any connection.
No, I think
between mortgage rates.
There might be a connection there, but they play games. The Fed plays games. What I tend to trust more is what's the market actually doing.
Very good. Yes, I think that's smart.
And to me, this says the market thinks the Fed's going to drop the rates by them coming down significantly. So we'll see if they stay down by the time the Fed meets again in September. But that's a good thing for buyers. That improves your affordability.
Right.
Sellers, that's a good thing because now there's going to be more buyers out there who can afford your properties. When rates do this, when they drop like this is the sweet spot. This is when buyers need to hop in the market because prices are still, like sellers are still willing to offer deals, give you credits, maybe reduce that purchase price because the general real estate market has not responded to these low interest rates.
Right.
But as soon as everybody gets accustomed to this change, you're going to see pricing on those homes remain strong.
Yeah.
And you might lose that opportunity to get a good deal. So that's why if you're thinking about making a move, it's better to lock that rate in and move sooner rather than later.
Yeah, find that sweet spot.
Yeah.
That's right. Yeah.
Yeah. And so anyways, it's just exciting to finally see rates kind of moving a little bit. I mean, it is kind of sad that they're basically where they were October of last year, but
I think we're seeing a trend in that direction, which is a positive. You think as a whole for the real estate market?
We'll see. I'm just really nervous because people are always like, I'm in people's houses all the time, and they're like, "Well, back in my day, we had a 17% interest rate," and I'm like, "Yeah, but you paid $50,000 for the house, like."
Who's saying this? Sellers or buyers?
The sellers are saying this. They're like, well, I don't know why buyers today are complaining about a 7% interest rate. Mine was 13.
Yeah. And how much did you buy your house for back then?
And I'm not there to argue with them, but I'm thinking in my head, like the affordability conversation is very different now than it was back then. You bought a house for $50,000, you were making $15,000 a year.
Right.
We've had this conversation before, right? Like, add some zeros. You're making $150,000 and you buy a house for $500,000.
Right.
Whereas now, like you're making $150,000 and you're trying to buy a house for $6,000, $7,000. Like JJ talked about it recently. A nurse and a person in law enforcement, I think it's a police officer, good paying jobs, both like, I don't know what their income was. It wasn't my client.
Probably 6 figures each.
Right. So I would expect it to be at least probably around $300,000 a year, and they can't qualify for a $700,000 home. And $700,000 is not like luxury. That's more like upper.
So you're in
entry.
favor of prices going down.
So that's my main concern is that if interest rates drop, prices remain high, and the affordability problem remains. But you know what? Buyers are buying, sellers are selling.
That's the benefit of living in a free market society. Capitalism works when you agree that when you live in a free market, things will work themselves out. Don't you think?
As long as the market is allowed to work itself out. If the government keeps coming in and saying, "Hey, we're going to drop rates down to affect affordability," well, then the what's still free in the market is going to respond, and prices will stay high. So you tried to improve affordability by dropping rates, but now all you did was increase purchase prices, which didn't really help affordability.
Well, right. Yeah.
So I agree with you. Free market is a good thing, but it can kind of be bumpy, in the day-to-day.
Yeah.
But what's interesting is, and we've talked about this also on the show in shows past, is the growing trend of people looking at homes as a lifestyle choice rather than
It's not an affordability issue. You're saying with this next generation, they're not purchasing a home because they can't afford it. They just prefer a different type of lifestyle where owning a home is not a priority for them.
Nope.
Which seems crazy to us because for generations, holy cow, the immigrants came to America because they wanted their own piece of this great country. They wanted a piece of land. They wanted to put their stake into a land and own it. And now you're saying, just kind of rent a condo or an apartment and that's good enough for me. Is that what you're saying?
No, I'm not saying rent a condo, but I am saying, well, it's really bad. So you know, affordability is a challenge when you can rent a house for much cheaper than you can own it.
Yeah.
And so if you're going to be in the area,
wasn't always that way though. In recent years, owning a home was cheaper than renting.
Correct.
But you're saying though it's more of a lifestyle choice.
Correct. Yeah. So like for example, there was a house, I think it was in Granite Bay. I don't know what it sold for, but it sold for like millions of dollars. Yeah. And you could like rent it out for $7,000 a month. Right. There's no way, like $7,000 a month for most people is probably like an $800,000, $900 million home. You're buying like you're living in a $7 million property. Like it just sold for like $7 million and you're renting it out for $7,000. That's crazy. The mortgage on that would be way higher. Right. And so when it comes to lifestyle choices right now, renting provides more flexibility with that lifestyle choice. If you don't like it, move. If they sell the house, there's another rental opportunity. Oh,
I hear what you're saying. Okay, so it's not necessarily the place that they're inhabiting. It's not a debate whether they prefer an apartment or a condo or a house. It's the fact that they like that financial arrangement where renting is more preferable than having a mortgage payment. Is that what you're saying?
Yeah, being locked in. Because what if because in today's economy, you can work remote. You can move. Right? Yeah. There's flexibility in work location.
I don't want to be locked in. I hear what you're saying.
And now if you're buying this beautiful house in Loomis, and you want to go.
People are afraid of commitment, whether it comes to rearing children, getting married, or owning a home. Our culture has shifted to where nobody wants to be committed to anything.
Well, the good news is with Made for More Realty, we don't lock into anything. So if you wanna list a house, we don't lock you into a contract. It's a minute by minute. We say, hey, whether it's 5 minutes long or 5 months long, if we're not doing our job, if you don't think we're doing right by you, or sometimes life circumstances changes, and if you no longer want to make the move, we'll rip up the contract part as friends. You don't owe a dime. And so that's, if you're scared of commitment, we can help.
That's right. Only when it comes to real estate, nothing else.
Only when it comes to real estate. And then
they have differing views when it comes to children and marriage.
Yeah, no.
Commitment is important. But not when it comes to signing an agreement with your real estate agent.
Not with the real estate agent. And even on our buyer side, if we can't get the deal done, if the seller isn't going to pay our fee, then we work for you for free. So we're not locking you into a contract. You don't owe anything when you work with us. You're not going to have to write us a check. And anyways,
and I think what differs you from a lot of companies and people out there, and I think people appreciate, is that you're honest and upfront. You don't sugarcoat things. You have real conversations, and people appreciate that because there's that stigma that realtors have where they're like next to used car salesmen, right?
Yeah.
And you try to fight against that persona with being honest, upfront, and truthful. And I think people appreciate that, even if it's not something people want to hear. Like when you're having these conversations with homeowners and they're saying, hey, and you're saying you got to price more aggressively, or here's what's happening, and it's stuff they don't want to hear. I think they still appreciate that you're being honest and upfront because we don't have a whole lot of that, whether it's in government or in society as a whole. People want truth. They want sincerity. Right. Yeah. Correct. And I think that's what you guys offer that at Made for More.
We do. And the reason why we're able to do that is because we're not hobbyists. Most people, they sell, a house every now and then. 71% of agents did not sell a house in 2024. And if you have the opportunity to work with somebody, you're going to do everything you can to earn that person's business. Whereas Valor and I, we're about selling houses. We're not about listing houses. So that doesn't do me any benefit to commit thousands of dollars to marketing your property, just because I told you a price that you wanted to hear when I know the house isn't going to sell for that.
Good stuff.
So if you want to sell your house and not just list your house, contact us, reach out at madeformorerealty.com. We're happy to have a free consultation. Great show today.
There you go. As always.
As always.